This is your LMAX exchange technical update for Monday, October 30th, 2017. Eurodollar. So the euro is triggered a head and shoulders top on the daily chart, with the market now potentially seeing a fresh downside extension all the way down towards a pattern objective, which comes in at 112.30. With that said, it'll be interesting to see how the market price action plays out over the coming sessions, because more often than not there's a lot of false breaks in this market. We did, however, see that close on a weekly basis below that neckline, which does suggest that we could still see additional declines, potentially back towards that pattern objective. At this point, it would take a break all the way back above 118.37, the high that was seen on the 26th of October, to take the immediate pressure off the downside. Sterling dollar. Cable has been chopping around and there hasn't been much in the way of any directional insight on a short-term basis. Key support here comes in at 30.27. Below and above, we're looking at 133.38. A break on either side would be required for a clear directional insight on the short term. Medium and longer term, however, dips should be supported in favor of an eventual return and retest of the 2017 high up around the 136.60 area and through 140 further up. Only back below 127.75 would compromise the medium to longer term constructive outlook now for sterling dollar. Dollar yen. So dollar yen has recently come up to trade into some major resistance, range resistance from this year, up in the 114 to 115 area, and the market could be poised now to stall out in favor of a continuation of that range, rolling back over. Key support here comes in all the way down at 111.65. A break below there would accelerate declines, while in the interim the pressure does on a short-term basis remain on the top side. But again, look for the possibility of this resumption of a range trade in dollar yen. Euro Swiss. So Euro Swiss poked up to another 2017 high in the previous week, trading all the way up to about 17.12 ahead of this latest pullback. But the market still is expected to trade higher in 2017 as this uptrend remains firmly intact, and we could soon see a push towards that next major psychological barrier at 120, which had been support all the way back in January of 2015. Any setbacks here should be very well supported on a short-term basis ahead of 112.60, and there is risk over the coming sessions for a bit of a pullback following a push up, but ultimately the market should be supported in favor of a continuation of gains. Aussie dollar. So Aussie has seen a bit of a bounce in recent trade, but overall this is a market that remains pressured to the downside, and rally should be well capped in favor of a continuation of declines down towards the next objective in the 75.50 area. Here we need to see a break back above 79 to take the immediate pressure off the downside. Dollar CAD. So dollar CAD saw an impressive rally over the past several days. In the previous week, the gains accelerated with the market pushing up above that August peak at 27.80, and this puts the focus on a retest of that psychological barrier at 130 further up. If we do see setbacks, and it is possible on a short-term basis given the extended trade, they should be now well supported ahead of 125 in favor of a higher low and fresh upside extension to challenge 130. Ultimately here, only back below 124 would negate the current constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar sunk last week to match the 2017 low from all the way back in May at 68.18. At this point, with the short-term studies a little bit extended, we could see a bounce here over the coming sessions, though ultimately, while the market holds below 72, the pressure here does remain on the downside, and there is risk for fresh declines and fresh 2017 lows below 68.18, possibly exposing 65 further down. SPX 500. Same story for the S&P 500, which continues its relentless push to fresh record highs. This has been an uptrend that has been going for several years now, and although the market has continued to push, it is worth noting that we are back into a scenario here where we're seeing daily, weekly, and monthly studies highly extended, which does warn of some form of a pullback, at least on a short-term basis, very soon, possibly over the coming sessions. We would, however, need to see a breakdown below 25.44, a recent support zone that's come in from lows back on the 19th of October and then matched basically on the 25th of October. A break below there would be required to take the immediate pressure off the top side. Gold. So gold has ultimately been very well supported on dips over the past several months. We have seen some sharp setbacks, but each and every time it seems like the market has been supported for a higher low and fresh upside towards fresh 2017 or fresh highs. So right now, look for the market to be supported ideally ahead of 1250, ahead of that next major upside extension beyond the current 2017 high at 1357 and towards and through the 2016 peak 1375 further up. Only back below 1200 would compromise this outlook.